We are live and we will be sending out this recording. If you are not here and listening later, thank you for joining in. It's our webinar disclaimer, just letting you know that we don't know what Michael Guthrie is saying, so I can't say that I promote it or endorse it, but hoping you do. Please do your own research and your own due diligence. Massive Capital and Realty One has a very large portfolio. We have Massive Capital 175 million in assets under management, and our partners Realty One have 290 million assets under management. We have been in a company for a little over 3 years now. We have 15 assets and are located in various states across the United States. Just in case you want to invest, we've got two opportunities. We have one that is called Harris Ridge. It is a triple net. It is a new development. It closed already, and it is a 3-year hold. Next to that opportunity is Horizon Apartments in San Antonio, Texas. It is 204 units, and we have closed on that one as well. So if you want to get into any real estate deals, now is the time. And if you need to, there are people in the chat who can help you out with that. Today, oh my gosh, I'm so excited. We have Mr. Michael Guthrie. He has served as the co-owner and vice president of sales at Automated ATM Solutions Incorporated. With nothing but a credit card, he and his wife, Samantha Guthrie, propelled the business into a multi-million-dollar company, raising among the top 5 largest ATM distributorships before making a strategic exit in late 2023. Michael is deeply involved as a capital raiser, multifamily investor, and syndicator at Pacific Capital LLC. In just 24 months, he has raised $80 million across 14 different syndications as a general partner. I'm going to say that one more time for the people who can't hear me. That's $80 million across 14 different syndications. He is a general partner in 8,700 doors across diverse markets, generating passive income with assets totaling to over $1 billion under management. Michael Guthrie, welcome to the show. We are so excited to have you.
I am so excited to be here. And my name is, I just noticed this at the bottom. My name it's AEL, not EAL. Sorry about that. My bad. I should have noticed that earlier. Thank you so much for having me. What an amazing introduction. I love the excitement, and I'm so excited to be here with the Massive Capital team. They've done nothing but go up since I've met the principals at the establishment. Maria has just grown into this capital raising forum just amazingly.
Oh, you're so sweet. I have known you for a little over a year now, and you've helped me so much. So when I thought of who could be our first speaker, your name was top of the list.
I'm the first speaker.
You are the first one
Oh my
outside
goodness.
of
I'm so
Massive
happy to
Capital.
be here.
Well, we're excited. So give us a little insight of what got you into real estate and what got you into raising capital.
So what got us into real estate? We, like Maria said, we operated an ATM company until middle of last year when we exited. But along the way, we started to make a lot of money. So we started investing in single family homes, like many of you probably have. We always want to start small because we don't believe we should go big out of the gate. So just like you, I started in single family homes, duplexes, triplexes, until we had about 7 or 8 of those. And then it became too much to manage. So we turned that over to a management company, and we literally let it sit for about 10 or 12 years. Probably the biggest mistake of our lives, and just kept growing what we're doing and paying huge sums in taxes. I mean, some of you out there, you've made your first $1 million in your life, and you're like, wow, now I get to pay $300,000 or $400,000 in taxes. But wait till you start going to pay $1 million in taxes, and you got to start figuring out strategies to get away from that. And literally about 4 years ago, we did. We joined a group, learned a little bit about multifamily investing, and we started to pour money in hand over fist. And we haven't paid taxes legitimately for the last 4 years. I'm going to say in 2024 for my 2023 return, because we sold the ATM company, I am going to have a tax burden. It's not going to be as large as it was during our time as operating the ATM company before we got into multifamily, but we will have a little bit of a tax burden this year. And I think it's actually okay because I needed to have some liquidity to continue to grow. So the reason I got into multifamily investing, number one, was for the tax advantages. I didn't need the cash flow, but I wanted the tax flow, if that's the right way to say it. I wanted to eliminate the money I was flowing out of my pocket into the tax man. So inputting huge amounts of money into multifamily real estate, other partners or other people in the space thought, well, if you could put this kind of money in, maybe you could raise money. So I literally was called by a lady in another group, and she had asked me to be a partner on the deal. She said she could raise $1 million. She said our other partner couldn't raise any, and as it was proven out, she didn't. And I had to raise the other $5.5 million on my first deal. So I literally got on my phone and I started texting friends and people say friends and family, but they're basically friends because nobody in my family has ever invested in anything I've done. So it was more friends and acquaintances that we had met along the way over the 28 and a half years of running the ATM company that got us to where we are. So we started I started texting them messages. I'm going to, I've been buying multifamily real estate. Now I've been asked to raise money on it. If this is an asset class you're looking to invest in, please send your email and the amount of money you'd like to invest in the chat below, and then put that in my text, and I sent it. And that's how I started to raise capital. I was like,
Oh, hold on. I got to back this up. You started raising capital and you raised $5 million on your first deal.
$5.5 million. And so it gets better. So the partner that brought me in, we went live with a webinar on Tuesday, and the portal wasn't ready till Thursday evening, 5 o'clock Pacific time. 5 o'clock Pacific on Friday, I had $900,000 committed to the asset via the PPMs and people signing up in the portal. And my partner that raised the $1 million, a little over $1 million, she calls me and she says, I'm probably going to need to bring in another GP. Money's not coming in fast enough. And I said, hey, give me 5 business days and let's see how it goes. By Sunday night at 5 o'clock, I had a little over $6 million committed. And by Monday, I had $5.5 million. Close of business Monday, I had $5.5 million deposited into the bank because I told people if they didn't get their money in, the only thing that secures their spot is money in the bank. And when you create that kind of urgency around what you're doing, people will respond to what you're asking them to do. And that's exactly how my very first raise went. And from then on, my phone just started ringing of people wanting me to raise capital. Now I'm going to tell you, it went really, really well for a couple of years. It's gone really well.
Okay.
When she says 80 million, we mean 80 million. But I'm going to tell you right now, in raising in Q1 2024, it is not the same as Q1 2022 or Q1 2023 or
Right.
2021 even. You know what I mean? So it's a completely different landscape. There's a lot more phone calls today needing to be made, and a lot more relationship building and trust, because everybody's like, well, interest rates are doing the wrong thing. Well, they have been doing the wrong thing. So people are a little cautious today in investing in multifamily. So that's literally how my first raise went, and it's been a great ride, but it's not the same today.
No, it's not. I'm glad you mentioned that. So you started with just sending one or two text messages, which crazy, mind blowing. Let's think about now with mitigating risk. How are you doing that in your conversations with people? Are you doing that over Zoom calls? I mean, with all these people that you're talking to, how are you making them feel more comfortable?
I'm sharing the experience of what's happened on the 14 syndications that we've done, or at least the first 8 or 9, because those were done late 21 and into the middle of 2022.
Mhm.
And I think 7 of those were on floating debt, and how we're still managing cash flow and covering debt and what we're doing to get to a point where we can actually start to distribute capital again. So I'm actually going on case by case studies and sharing with my investors because most of them are investing in almost every deal we're doing. The best part about an investor is you can get them to do repeat business, but you have to communicate what is actually happening in those deals to create that comfort for them to put more money into more deals. And like if you listen to like Warren Buffett or Ray Dalio or Paul Tudor Jones or these huge guys that do a lot of investments, you have to invest consistently in good markets and in down markets, and you're going to actually see your investments propel upwards. We're right now buying deals where the syndicators that got in over their head and bought the deals for a heavier dollar amount than we're buying them for today. We're seeing those opportunities. It's not a huge discount, but if you can buy something at a discount from what they bought it for 2 years ago, 3 years ago, just think of where you're going to be able to take that asset over the next 3 to 5 years. There's a lot of inventory that came on in the last 12 months, and there's another 12 months of projected a lot of inventory, but there's not a whole lot of inventory coming on in the next 24, 36, or 48 months because these things take 3 to 4 years to build, and there's not a whole lot of groundbreaking going on today to make that happen. That ground was broken a year or two ago for what we're seeing today in slowing rent growth. Like even in here in Arizona, we have rent decline. I'm
Right.
not seeing that in Texas at any of my assets, but I'm seeing that in Phoenix rent decline. And why? Because there's huge amounts of Class A property coming on. And instead of charging $3,000 a month for rent for a studio here in Phoenix, they're charging $1,500 for the first year in
Wow.
concessions just to get those buildings leased up. And they've already told the tenants, this is what you're getting for year one, but year two, this is where it's going to go. But so many people are flocking to that brand new product right now. And are they going to want to step back in a year or so and go, I can't stay in this product anymore? Or they're going to step up and pay the real amount of rent that's due. So we'll see what happens long term. But right now, there's deals to be had in the B and C class properties. Maybe even some people that are in class A have gotten out over their skis. But it's just important to pay attention to what's going on in the markets you're investing in and make sure that you're working with a team that has the cash liquidity to cover
Right.
any errors that may be made in underwriting or debt that may be floating out there. So you want to make sure that you're working with a team that's secure and able to take care of things, so they're not always reaching back to the investor for cash on a cash call kind of basis.
Right. And to that point, when you're looking at a new deal or someone asks you to raise, what are you looking for? Are you looking for something that's beneficial for your investors? Are you looking for the team? Does the deal even matter? Like, are you looking for certain returns? What are your key things that you're looking for when someone says, "Hey, will you raise with me?"
Two things today are super important. And number one, and if you ask any of my investors, the number one thing they bet on is the jockey, the team. So you make sure you want to be aligned with a team that's going to take care of you and your investors long term. There's so many teams out there that I see that they're all worried about themselves and they're all worried about their next acquisition fee. So then they can go ahead and eat, and don't necessarily those teams are more focused on that fee because they don't have the net worth or liquidity to weather a storm. So number one for me is the team. Number two is the asset and location of the asset. There's a couple
Okay.
different areas in the United States where there's a huge influx of population and there's nowhere to really go out, and they're having to build up. So Neil Bawa spoke at a conference I was at, and he's a data scientist by trade, and he literally said these are the two areas in the United States to invest in, and those are the two areas I'm remaining focused on so that I can bring more value to my investors. And one of those, like you at Massive Capital, is San Antonio,
Hmm.
because there's not a whole lot of room to build. But between San Antonio and Austin, there's a whole lot of compression going on. And if you could be buying in that area, that's one of the two areas in the United States. If you can be buying in that area right now, that's a great place to be buying in.
So, what are the areas that we did have a question come in?
That
So
that
you've got
one,
San Antonio.
San Antonio. The other one is between Athens, Georgia, and
Okay.
Atlanta, because
So Georgia.
there's so much building going on that, like the I-35 corridor in like New Braunfels, like Liz says here in the chat. That's an amazing place to be buying. There's not a whole lot of more places to build, and there's so many jobs and so many companies moving their businesses to Texas. They're not moving necessarily to the Dallases or the Houstons. They're moving more inland and where it's safer climate wise, no hurricanes, tornadoes, those sorts of things, which I think happens to fall between on the 35 corridor between San Antonio and Austin. And that right now seems to be a hot place to buy. I don't like Austin because the cap rate compression is still in
Right.
effect. I do like the New Braunfels, San Antonio area a lot better.
So San Antonio, Athens, Georgia. Those are some good markets. All right. All right. You got any
Absolutely.
deals in there right now?
I have a deal in San Antonio that a gentleman bought it for 2 years ago, November, for $11.6 million. We're
Nice.
buying it for 11,
I love these.
and we got it under contract late November, and we're closing next week. It's a great opportunity. And it's been running 96.5% occupied and paying for literally a long time. But the problem is the gentleman stepped in to manage it himself.
Yeah.
And that'd be like me acting like my own attorney. I'd be a fool to be my own attorney. That's why you hire people that are better than at you doing what they do best. And so we always bring in a third party management company to manage our assets, like I'm sure Massive Capital does, unless
Of
they're
course we do.
actually,
Of course we do.
yeah. So
Yeah.
then you
It's
have
nice.
somebody.
It's the team. It goes back to that main point where you're looking for someone to join to raise capital with. It's all about the team. Everyone stays in their lane. Everyone is a champion of what they're great at. You don't see me underwriting deals every day. That's not my strong suit. My strong is capital raising as well as yours. So I'm guessing you're not underwriting every night. I'm guessing maybe.
um I don't underwrite at all. And
There we go. There. I didn't want to
I
say
think
it.
that's
I
the answer
didn't
you
want to
wanted.
say it,
I think that's the answer you're
but
looking for. I Go ahead.
you're fine. You're fine. You're good.
I completely understand the underwriting. I can read it. I play with the spreadsheets myself to so that I can look at worst case. What if the note goes from 6% interest to 8% interest? Can we still survive at what occupancy and paying level? Economic, I call it economic occupancy because it's the people that are paying that make a difference. People look at economic vacancy or they look at occupancy numbers. And while those numbers are all great, it's more about how much, what percentage of the occupied units are paying. That's the bigger one for me. And are we how much delinquency is actually running? That's the money that comes in is what pay the bills. If we can keep the top line full, it takes care of everything that comes below. That's why they call it top line revenue. Because if you can bring in the top line, it takes care of all the bills that come in below that.
It's amazing. It's amazing. For someone getting started, we've got some new capital raisers on the call today. For someone just getting started, how can they start raising capital and maybe excel to raising $80 million?
It's not about asking for money.
Okay.
It's about sharing what you're doing. And the more you share what you're doing with your friends, your families, your associates, your acquaintances, and how that's working for you, people will just say, I want to be part of that. I have an extra $50,000. I have an IRA that when I got let go of this other business at 401k got rolled over into a self-directed IRA. And I could park that with you. I mean, I literally here, true story. This gentleman's been on my list for about 6 years. He painted the whole inside of my house in Spokane, Washington. And hopefully he sees this, but he painted the whole inside of my house in Spokane, Washington. And he's like, I've been following you and following you and following you. And he goes, my mother-in-law passed away and I now have $100,000 inheritance. And this is literally on this San Antonio deal I'm doing right now. He calls me and he goes, I have 100 grand. I want to put it in what you're doing. He goes, I now have all this liquidity and I don't know what to do with it. And he goes, but I've been watching what you're doing and I trust you and I want to do what you're doing. Right. And it just, people, people like to learn about what it is you're doing and understand it. And you, over time, people will come in. Like I have a huge list of people. On my
Right.
first deal, only 60 people invested. On my second deal, about 70 people invested. And the number just kept growing. The more times we do deals, the more deals we do, the more people come out of the woodwork that are on your list because they start to really trust this is what we're doing. This is what we're focused on. This is what's important to us. And right now, 100% of what I do is focus on real estate. And I sit on every property that I am a general partner on outside of one group that manages the assets really, really well. I sit on every single property management call. And if I can't be there, my assistant is, and I have a recording AI software that logs into all my meetings and records them. So if neither one of us can be there, at least I get a full recording with video of exactly what was said and what's going on. So then I get a weekly report of how each property is performing. So when an investor calls me and asks me about X, Y, or Z, or right now we're all getting calls about where's my K1,
Right.
we can literally pick up the phone and without having to dodge the call and answer them so that they know that we as investors and capital raisers are on top of the assets that we're actually working on. We're not treating them like a checkbook, we're treating them like a human. So then when they call, we're here for them.
So true. And how much communication do you continue to do with them after the deal? I mean, you've raised the capital, you're listening to the calls, but what do you do after the deal closes?
For the properties, I do literally a quarterly email on each property, and then we do a biweekly newsletter to all of our investors to keep educating them on what we're seeing is going on in the market. Like right now with the bill that's stuck in Congress to back up
Right.
bonus depreciation. I reported it and then I seen others report it and I'm like, wow, I wonder if they got my email and now they're reporting that to their people. Because as soon as we pay attention to all this. We pay attention to what's going on with the 10-year treasury. Like yesterday, I was on the treadmill. It dropped to 4.138. I text my guy because I'm doing a refi. I go, can we lock today? It's at 4.138. Because then with the spreads, you get a better rate. But you have
Right.
to be watching and paying attention. There's so many different things, and if you're working a full-time other job, when you're not working that job, you better be paying attention to what's going on out there. So then when somebody calls you, they feel in their heart that you are paying attention to everything that's going on. This is a relationship business. Like I said at
Oh,
the
yeah.
a little bit out of the gate, people bet on the jockeys. The deal is the deal, but for the most part, they bet on you and they trust you with their money. So you have to create that relationship and continue to create that relationship.
So to make yourself the best that you can be for these calls with your investors, what are you learning from every day? What are you listening to the news? Are you listening to market trends? What are you researching?
I watch market trends. I watch what's going on in apartment trends. Globe Street's a good resource for me. Grit.com is another great resource. And then I just have a ticker with the different treasuries on my desktop that we watch. And so when you see it, like at the gym when they had it up there on the screen, it was actually I'm like texting my loan guy
While running.
while running on. Literally, I slowed down to walk, but yes,
Okay, good.
while on the treadmill doing my workout. But we have that free time. So what are we putting in our ears? What are
Hmm.
we listening to? This is the eyes are one thing that are a great resource to see, but our ears, so much comes in our ears that we can't control, but we can control it. When we're listening to a podcast, a different webcast or
Hmm.
or news, we control what comes in. The resources grit.com, GRIT, and then Globe Street. Globe Street's more, it goes through the apartment, but Grit's more discussing what's going on in the market. So they give a lot of insight. They have a free service, but then they also have a paid service if you want to go deeper. So those are two great resources that I use.
That's good. We have a question in the Q&A that says, my niche is also networking and capital raising. How do I find great underwriting slash due diligence people focused to hire for my team? So how do you find those types of people to build up your own team? Or do you just join other teams?
How do those people find me?
There
Is
we go.
is
There we
probably
go.
is probably the better question for me. I'm in a couple different groups, a couple different masterminds, and they focus on real estate. And like Massive Capital, we all met at a on another stage with another capital raising kind of opportunity, and that's how we got to know each other. And we we can collaborate, we can do deals together, but to find other great underwriters, you're going to want to be in other groups that are doing that sort of activity. And I'm not going to throw those names out here on this. This is the Massive Capital call,
You
but
can, it's okay.
You can Google that and find different groups to join that are doing multifamily deals. Massive Capital does a great job of underwriting. These guys are pretty tight in what they're doing, and if they get it wrong, which I don't believe they have, if they get it wrong, they have the liquidity and net worth to step in on the behalf of the investors so they're not having to do capital calls. So
Correct.
they have a team that's I just want to say they're very careful in what they want to buy and where they want to place massive amounts of capital. That's the right word to use
Oh,
it.
you're too sweet. Thank you for such the nice plug there. I did appreciate that one. It's true though. I mean, when you are wanting to raise capital, you have to find a team that can pay if something happens. Can't just be the three buddies that you met at a mastermind event together. You really got to have people who know what they're doing. I mean, we get people every day who say, "Well, what deals have you gone full cycle in?" Personally, I have not, but the people I partner with have. There's people on Massive Capital's team who have. I mean, have you gone full cycle,
I've
Michael?
been I've been full cycle on two deals, and the two deals that are full cycle, I was a limited partner on. One of
Okay.
them lasted all of 14 months,
Oh, okay.
and we 2x'd our money in 14 months. That's how
Okay, that's
great
legit.
2020 was. I put money
Right.
in December 2020, and in late January 2021, I got it. I'd gotten a $600 quarterly distribution, and I 2x'd my 50K by the end of January. And I was like, this is amazing.
And here you are in 2024, and you're like, uh, raising
Where's
capital is different.
2021 again?
Yeah, exactly.
But
Exactly.
but that's real estate. It's all cyclical. If you look at the housing market where you live, prices go up, 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 and then they correct and they stay flat, and then they go up, 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 up. And when they stay flat or they dip a little bit, people are like, oh, we're going into a deep recession.
I know.
Maybe. But most of the time, if it goes up 20% and it corrects down 5%, did it really go down? No, because it's going to go up another 10 or 15%. You have to be patient. This is not a sprint. This is a marathon. And this is for those who want to create true wealth, not crypto wealth.
Why
And
do you say that?
well, because there's so many folks out there now that got into crypto, they've made a ton of money and they're investing it into tangible property. When I
Hmm.
say tangible, they're buying buildings, homes, and apartment complexes because they need to diversify their holdings because they know, and they've seen crypto come down. I mean, where's it at today? It was in the $60,000. It was back up to
Yeah,
its high literally a few weeks ago. I don't know where it's at today. I don't follow that. That's not something that comes up on my ticker because it's not important to me. I own zero crypto. I've never bought any crypto. I missed the bandwagon clearly,
I
but
know. Never say never, though. You
but there's so
might
many
one day.
there's a way out there to make money in almost every single asset class, but you have to know what you're doing and you have to align yourself with a team or a group or be with advisors that are going to direct you in the right direction.
Amazing. So, people ask us every day where we find investors. Now, we have a large database, you have a large database, but let's pretend like you're just getting started. I know you had a lot of people on your first deal, but where do you find investors? Quality people that you can talk to.
where would I go to find
Yeah.
quality investors?
Yeah. That's
I
really
would
important.
go to attorney conferences, doctor,
Okay. So not real estate.
doc, well, because everybody that's at a real estate conference is doing the exact same thing I'm doing.
Glad you said that. I think I've said that so many times to
So
people.
many people, they want to go where it's, there you go. Thank you, Janae. Medical and dental meetups. You're not going to get an investor at a medical or dental meetup the first time you show up. You're not going to get one the second time you show up, but you show up for 12 meetings, one a month for a year, you're going to start to gain traction. And once you crack the code of that profession and get a couple investors in, what do? They tell their friends, and their friends tell their friends. And then all of a sudden you have a whole nother database that you're operating from. So many of us want to go to where we're comfortable, like, hey, are you going to be at the best ever conference? No. Why not? Because everybody there's doing what I'm doing. What information are they
I
going to
know.
give me that I don't already have? Not that the best ever is not a great conference, or IMNH, or the National Apartment Association, whatever. All those people there do what we do. If I'm there to get
Hmm.
information on where I see the apartment trends are going, where lending's going, where cap rates are going, what kind of complexes are coming online, if I want to learn that, that's why I would go to those conferences. I don't go to those conferences to find people to bring money to my deals. They're not going to. They have their own deals. And so many people think, if I join a capital raising group, I'm going, no, we join a capital raising group to learn how to raise capital, not to raise. I'm not going to raise any money from Maria. And it's quite possible she's not going to raise any money from me.
Probably.
But I did notice that I have somebody on here that's a massive capital team member that has invested in a deal that I am a general partner on. And I'm not going to say
Mm.
their
Mm.
name. I'm just going to leave it out, their name, but they are in a deal that I'm in. I was really surprised when I was going through the K1s that they're on a deal that I'm a general partner on. And I thought that was amazing. But I'm not, so there are times when you have a deal that people feel is good enough, or the investor wants to be in a certain market, and they're going to go, okay, I'm going to try that market because I trust those general partners.
My
But the
first
likely,
investment was on a deal that you're on. Was in REAP.
and oh, perfect. That wasn't the one I'm talking about, but
I know, but I'll
thank you
talk
very
about it
much.
because I'm here.
But you trust the jockeys, not necessarily the property. So Maria trusted me, and she trusted the Garzas because
Yep.
she's
And
in on
Julie
that
Roy.
deal with REAP property. Um, but if she didn't know me, or she didn't know them, she wouldn't invest. But she probably wasn't coming to that conference that we originally met at
Right.
to find me as an investor. Or maybe we were, because maybe we were both naive at that time, thinking that the people in that room are going to invest in what we do.
Right. We were all running around for the one person who was investing. And we're all trying to talk to that one person. And honestly, at that conference, it was me. I was the one who everyone was running around wanting to talk to me because I was going there to find a deal to invest in. But that is a great example. That's why you go to outside networks, outside meetups. Um, so you're not a physician or in the medical field. How did
No,
you
but
walk into those medical groups?
I grew up being an
Okay.
X-ray tech. So I do have a little bit of medical background. Before I did
Okay.
ATMs, I was an X-ray tech, and I used to do MRIs. So
No
can
way.
I walk into that group and speak a little bit of the lingo? Yes. But the more important thing I speak about when I go into those groups is, you're so busy doctoring, or you're so busy lawyering or CPAing or whatever it is you're doing, that you don't have time to go out and find alternative investments. But what you do is you do hand money over to a investment advisor who gets 1 to 2% of your money every single year, whether you're making money or not. And I can help you park some money where you can actually double it in 3 to 5, 7 years by putting it into a tangible physical asset, like an apartment building or a triple net building that we buy. Other opportunities, outside of the traditional stock market. And who knows, maybe Elon Musk sneezes next year and we lose 30% in the market again. I don't know how that goes. I just know when he sneezes, my apartment buildings don't go down in value, but my stocks did.
That's true.
When I had money in
That's
the
true.
market, my stocks did. And so I can speak from my experience. So again, it goes back to sharing your experience. I'm not there to sell you a product or pitch you. I'm here to share what works and that it takes time. Just like they're like and it's just like building a medical practice.
Mhm.
You don't open the doors on Monday as a brand new doctor and have an 8 to 5 or a 7 to 5 p.m. schedule full of patients. No, it takes time for people to build that. Same thing, it takes time to build a great portfolio of real estate and to get into opportunities. So just like them, they're busy building their business. I'm busy trying to help build their portfolio. So then they have something to do. I was on a call with a lady yesterday and she's like, well, I'm retired. And I go, well, why are we on this call? She goes, because I need to make more passive income. And I go, well, then I need you to start investing in properties. And she goes,
Right.
that's why we're here. And I go, great, I'll send you the opportunity right now. And
And
she's and so her and her husband are consultants still working in their 60s, but they're looking to have another opportunity of investing to figure out how to do cash flow because their money in the stock market isn't creating cash flow. Their investment guide has them in things that aren't creating dividends, that aren't they're not in the way my wife says spitting off money. The
there
only
you go.
you cannot spend net worth. I've tried. The only thing that works is cash. I can only spend cash, and if I have cash coming in, I have cash to spend.
Mm, yep. Oh, it's so true though. It's funny when you get investors who will call and they'll ask those questions. They'll ask you kind of your track record and understanding. But at the end of the day, they really just want to get to know you more. They want to understand and trust you because that's who they're investing with. The deal could be, yes, we love our markets and our locations. The deal could be really anywhere. It's the team, it's you, it's your story that they're investing in.
Correct. And they want to know when they pick up the phone and they dial your number or your extension that you're going to answer.
Yes.
Good times, everybody answers. Bad times, some people go, I'm not really sure. When it's bad, you should always, I mean, I literally had a meeting with an investor. Like when I was out in Newport Beach, we were talking
Mhm.
earlier before we came on
Yep.
live. So I had dinner with an investor and he's like, my printer broke down. I was going to bring you the financials. And I'm like, the T3, we have actually are taking our NOI up almost 70% in the last 3 months by bringing on a new property management company. And he was like, I was going to bring him because I thought we were going bankrupt. And I started explaining to him where we're at and why we're refinancing to get fixed debt before our floating debt expires in end of July. And all of a sudden now he's like, wow, I didn't really understand that. He thought he understood what he was looking at, but where he was missing, he thought the variance was loss of money. No, it's just a variance on where our budget was versus where we're actually at. So
Oh my goodness.
he didn't understand that and he wasn't reading it correctly. And he said he wasn't getting the monthly newsletters. And I go,
Right.
well, according to my Go High Level, you haven't opened them all. You've only opened two. And I go, and I can show you the report here that they've gone to the same email address. You just haven't opened them.
Did you
He's like,
actually say that? You just didn't open the email?
yeah, and I could show him the proof
I love that.
because of the CRM. And so now when we send out a thing, I'll text him and I say, please check your email. There's something waiting for you there. But they want to know that you care enough to reach out. And
Hmm.
some investors, not necessarily everyone, but some investors need a little bit more hand holding. They want to know you care. And
Right.
we can't hold everybody's hand, but you can hold a few. And what happens when we return that guy a 2x or a 1.5 or a 1.8x on his cash in a year or so? He's going to be my biggest cheerleader out there talking up what we're doing. He used to raise capital for himself on in another industry. So let's go with medical. In a medical industry where people waited 12 years through 3 capital calls and 12 years to get a return. we're 2.5 years into this opportunity that's supposed to be a 5-year raise or 5-year time horizon. And I go, we're 2.5 years in. Oh, well, maybe we should just sell it and take a loss and people will be very happy. And I go, no, 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 no. We are not going to take a loss and I'm going to make sure of it because you brought money to me and you asked me to take care of it. I'm your liaison between the project and you, and I want to make sure I'm doing what I committed to you to do. I go, and that's who I am as a person. And I will see to it that we are successful. That's the important piece for me.
Yeah, because people are trusting you and you have to then fulfill that. I mean, once the capital raise is done, once the deal is closed, and once we're into asset management phase, your job isn't done. Your job is just beginning.
Just
I hate
started.
it when capital raisers come in there saying, "Okay, well, we're good. We're going to move on to the next one." No, because those people who invested with you are going to be the first people to invest with you again. So if you're not taking that time to really talk to them and nurture that relationship, whatever they invested, whether it was 1 million or 25,000, that investment matters because it was their hard-earned money. You got to keep talking to them and you got to keep reporting to them. So I'm glad to hear you talk about it because there's a lot of people that I've learned from that might not do as much as you are. So it's good to hear that.
And it's always great to emphasize to the investor that they matter.
Right.
Their money is more important than my own because I can go out and earn more. They may or may not be able to. So it's always important to let them know how important they are. And maybe sometimes you just have to tell them, you matter, and so does your money to me. And that's why I sit on all the calls. I don't have to. I
Right.
wasn't supposed to. That wasn't what I signed up for. But looking back at it, it's exactly what I signed up for. It wasn't what I was expecting, but it is what I signed up for, is to be a resource and a guide and a protector of our investors' money.
Right. Because at the end of the day, we can't do these deals without them.
100%. They allow us to do what we do on a daily basis, which now you and I get to share this wonderful information with these beautiful people that are here listening to us have a conversation about it.
Yeah. So true. Now, please put in the chat, or if you have any questions, you can do the Q&A. While we're seeing any questions come in, I'd love to point out that if you scan Michael Guthrie's QR code, it'll take you to his link tree, which has all of his links, all of his social media. So you can follow him along his journey or even learn from him as well. If you scan mine, it'll take you to our book a call link. If you want to raise capital with Massive Capital or with me, then I can help you out. And there's some other people who are on there as well for a CRM and for our education program. So I do see one question. Oh, I love this. I'm an ICU nurse located in San Antonio, Texas. Oh my goodness, why haven't we met? I have direct access to physicians all over the city. Oh my gosh, I'm loving this already. Since I float to multiple hospitals across San Antonio, what is an effective way to open up the conversation of passive investing while at work?
Just let them know you're not going to be while you're a nurse today. My dream is to help more people than just the people that come through the ER. And the way I do that is by investing in multifamily opportunities and sharing that, because at the end of the day, we're not all going to be here at this hospital forever. We all have other aspirations, travel, retirement, freedom. Everybody always says, I need freedom of time. Well, what are we doing today to create that? The ER physician might love what he's doing today, but when they're doing 12-hour shifts 6 days a week, where's the end? There, if you and just check out White Coat Investor if you want a great resource on how to speak. Okay, I'm just dropping too many nuggets.
I
I'm
know
giving
you
away
are.
too
I
much.
know you
I'm giving away too
are.
much, but White Coat Investor, if you go there, you're going to get a ton of resources from physicians that are now investing in multifamily so that they don't have to wear the white coat forever. So that's another great resource on how on things to talk about and how to bring it up. And if you have a close relationship with a doctor, maybe you sit down over a coffee. How about ask them, hey, you got more education than me. Tell me about what you're investing in. I have all this money as a nurse that I've been saving and saving. Explain to me what you're doing. And then he or she will tell you what they're doing most of the time if you have that relationship. And watch when they go, what are you doing? And now the door is open.
That's the
And all you
key.
have to do is crack that one doctor, and how many more friends or how many people in his practice, because a lot of ER physicians have a group of ER physicians that actually operate that ER. They're not necessarily employees of the hospital, they're contracted. Most of the time they're contracted out, and I could be completely mistaken, but when I was
No, you're
doing
right. You're
X-ray
right.
and MRI, that's exactly how they were doing it back when I was young, when I was Maria's age.
Oh my
Um,
gosh, we're the same age. What are you talking about?
so anyways, but that's another great resource. Thank you. If hopefully I
Genevieve.
said Kareem, I will just go with the last name
Oh,
Kareem. Great for putting that in there. That is exactly where to go. And there's some amazing resources in there. You can pay for additional resources, but there's a ton of free content. You can also sign up for their newsletter, and they send stuff out about once a week. I have a whole inbox of stuff, and I read it so that when I'm in front of physicians, I know I'm speaking their language. The worst part is as capital raisers, we like to speak our language, IRR, NOI, whatever. They don't get that. They
right.
understand investing, return, and for time freedom down the road from mailbox money. That doesn't necessarily today come in the mailbox, but it shows up in your bank account via an ACH. But you have to explain what that means so that way they understand it. But you have to speak the language of the person you're wanting to communicate with so they understand you in a way they need to be heard.
Exactly. Exactly. Because we're not asking these people to invest with us and leave their jobs. I mean, we left our jobs. You and I did. I was in the hospital. You had your successful ATM company. You left that to do this full time. I'm not expecting these investors to do that too. We want them to be able to invest passively, understand enough, and then we can take over, we can manage it for them. So that's the big point there. You don't want to have them tell them they need to do what you're doing. You don't want them to raise capital. You want them to keep working at the hospital, keep working in the tech field, keep working in any industry that your investors are in, and you can help them achieve financial freedom so they can go to their jobs happier and maybe not be a slave to the profession that they're in. So that's the main goal, right? Have
Exactly.
more
Just
time with family, more money to live off of.
Yep, it just creates an additional stream of revenue so that they can explore their passions even more deeply. And you'll learn about the passions of the guys with the white coat investors because one was a physician and his partner is a contractor. And they like to go climb mountains and do all sorts of beautiful things. I got to listen to them speak late last year, and they were just amazing.
It's
Two
awesome.
totally different guys. One's a total nerd and one's a contractor. Guess which one's which? No, I'm just kidding. But the way they speak and the way they approach the audience, but the way they shared what they're doing, it was in their language because they're directing their talk to the people they want to speak to, not to people like me. I would have to adjust my language to have better conversations with them.
Right. So good. Now we do have a question that might be a little difficult. Okay, so this one's from Ivy. How long did it take you initially to decipher the code for capital raising? And what are the top two best practices for newcomers diving into capital raising? Only two.
Decipher the code.
How long did it take you to get
The
into the code to crack the code you've done?
one first and foremost, you never want to sound salesy or needy
Okay.
because that sounds like desperation and things aren't going well and we need your money, mom. We need your money. We need money, 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 money. Never sound salesy or needy. Number one. Number two, always be creating more relationships. And don't necessarily, biggest mistake. People lead with what I'm doing and what I need. How about we hop over the fence and we get to know what Maria's wants and desires are and what she needs. And then we come in and backfill with what we have available. So many people want to shove down my throat who they are, what they're doing, and why their investment is the best one. They're all the best. Nobody's ever sent out a slide deck or a proposal that doesn't say we all have blue sky.
Yeah.
The sky's always going to be blue, but not in every investment. There's always going to be ups and downs. That's just the way it goes. But you have to listen. That's why there's two of these. We have to listen to what the other person, and I just say there's a wall or a fence, but we have to get on the other side of the fence and truly understand what it is that investor needs. That's why we have to have these one-on-one Zooms, especially in the 506B arena. You want to know and understand what that person wants or needs. Otherwise, you'll never be able to fill it. That's why when you go into the grocery store, they don't know what you want or need. That's why there's 10 different kind of beans to buy, or 14 different kind of lettuces, or 19 different kinds of milk, because they don't know what you need. They don't understand what you need. You might just want regular 2%. I need the acidophilus blah 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 milk. You don't know. That's why the grocery store stocks everything, because they expect to be able to take care of everybody, but they have to provide all the products to take care of everyone. We as capital raisers need to understand the few things that are important to the investor and what they're looking, what outcome are they looking for? And is this the right one? Is it their last 50 grand that you need for that investment? Is this their the investor's last 50? I don't want to take their last 50, but I know people that would take your last $10 to put in the investment, because they care more about themselves than they do about you.
So good. Hope you guys were taking notes on that, because that was an amazing answer. We will be sending out the recording too, just in case you weren't able to write as fast as Michael was talking. Last question. What were some of your initial challenges when you first got started in real estate?
Well, I got told I was a newbie a lot.
Did you really?
But that was from two people that wanted me to be on their team, but didn't want to compensate me in the way I wanted to be compensated. So they're like, "You're a newbie." I'm like, "I might be new to this, but I understand business." And I go, "I don't need a deal." And that's where I was. I don't need deals. My wife, even to today, she's like, "You're at the beck and call of others for a deal." And I'm like, when I see 8 to 10 deals a month, there's not a lack of deals. There's a lack of good deals or a lack of good teams that I want to participate with. And right now I'm in the middle of buying a house. So I'm trying to wrap up what I'm doing and then not do anything for a few months so I can get my house in order. I mean, I was literally at a meeting with a bunch of gentlemen on a ski mountain in early January. And I was told I need to settle down my house and figure that part out and then move forward. And did I listen? No. I took on an opportunity and I'm raising capital on it. And so I didn't listen to what I was told to do. I was doing what I wanted to do. And when I do what I want to do, I pay the price. So we have to sometimes just slow down and listen to what's important.
Yeah, that's good. That's good. Well, I have a few things left to share.
For sure.
I hope you can see my screen. Awesome. So if you've liked what you've heard today and you are just starting out and raising capital, you need to have a CRM. Michael and myself have talked about having a CRM, a way to check that your investors are looking at their emails, a way to connect with your investors, and a way to actually get in contact with your investors. So if you need help, we do have one called Client Harbor. If you need any information on that, the QR code is right there. There's a 14-day free trial that everyone should take advantage of. Next is our coaching program. It's the Pathway to GP. If you are looking for mentorship and you need a first place to get started, that would be ideal. And then our next thing coming up April 5th is our hackathon. I didn't know what hackathon meant when we first got started. It is hacking mixed with marathon. Therefore, you get hackathon. So at this hackathon, it is a deep dive in one day. You will be ready to go from start to finish on getting deals together. I think they're even going to take down a deal in one day. It is an amazing day opportunity. Please scan that QR code. You do not want to miss it. So with that, Michael Guthrie, it has been amazing spending this time with you. You have dropped nugget after nugget, maybe too much, but we love it anyway. We're so happy you did that. I will leave you with any last thoughts?
Yes, just one more. If you're not starting today, a year from now, you'll regret that you didn't start today. So when you commit to something like listening in on webinars like this, if you find something that you like or want to do, get busy doing it, because a year from now, you're going to go, why didn't I start and get down the road doing what we're supposed to do? And if you're just looking to invest in great opportunities, follow Massive Capital. They are doing an amazing job out there, and they don't take their underwriting lightly. They go out and they find some of the best assets and the best areas and locations to do that. And I'm not here to pitch what they do, but I've been watching what they do, and they do an amazing job.
Thanks, Michael. It's been a pleasure to have you on today as our first official guest speaker. You have blown it out of the water and really set the bar high for anyone coming after you. And we thank you so much. I know when we first got started, I was a little intimidated just to get started into capital raising, but look where both of us have come. And now I'm interviewing you on our podcast. So thank you so much. I love having you here. Thanks to everyone. I hope you learned something or took some takeaways away, and we will see you in 2 weeks on Massive Masters Raising Private Capital. Thanks, everyone. Have a great rest of your Thursday.